Welcome to Commodities, and here we're looking at the US dollar, and I know it's not labelled, sorry about that, but it's on the labelled on the FX template, which I would need to change, and I'm on the commodity template. But in a bit of a nutshell, you know that we'd been looking for a three-wave move in terms of a five-wave structure, three-wave structure and a five-wave structure, somewhere up into the 87 to 80 area and also the 81. Now, we've got that spike up there, so we may have a turn in the market, but I wouldn't turn bearish unless the 80 became the retested resistance. So we would obviously see a bounce there. But if this was the case here as such, then would turn bearish on this. And what that would mean at that point, if that was the case indeed, then we would be looking at commodities strengthening, finding their lows. So it's just something to look out for. Yeah, look, we need resistance. It could certainly just, move up here as well after a bounce here. I don't know. But if this is the case here, then we know that commodities will begin to stabilize on their current lows. The gold market on the weekly chart here, just working through this possible triangle formation and in from wave C down into wave D. We were looking for a 61.8 retracement level of the previous wave here, which is about right. Well, actually, it's above the 1250 sort of area, but we were looking for the 1250 as support, and we know that the support was going to be here because of all this price action over here. Markets tend to reflect their sort of price action, so to speak. Look, we just really need to see what occurs at the midpoint, the 1250, and I just thought I'd sort of leave this in. I know from the days before computers when we had the hand draw charts that triangle patterns here tend to complete on the apex here. It's just something that I always used to look out for. I'd forgotten about that. But anyway, let's just see how we go here. We're treating this basically, this wave structure here as a wave 4. So I'll just go past that. We're looking at it like this here in terms of a wave, a B wave, and a C wave. And the C wave here will have 5 waves in it, and I don't think it's complete yet, so it should have one more move up through to here, and also pulling back to the 4th wave of 1 lesser degree, which is here, which is around the 1260. So we need to see it exhaust itself to the upside and then roll over and test the 1250. And we just need to wait for that, because that's really our confirmation to be long or to be short. So let's just drill into that a little bit further here. Same pattern to the upside, to the 1260 sort of area. Once again here, just going in here again. It looks like on the 5-minute chart that we've got wave 1, 2, and 3 here, back for 4 here, and looking for wave 5 to be higher there. You could probably go along off the 1253, the 3 being a group 1 here as support, but I'll leave you with that. It's not something that we're sort of looking to do, but we are expecting a little 5-wave structure to finish up into here. And if this comes back down to let's just look at this here. I mean, we work with this is the 50-60% retracement level, so it comes in close on the 1250 anyway. I mean, one of the main points here though is to work out if this comes down in 3 waves here, and then moves back up below this one here, then this move here down is corrective, and we will go higher from that point. If we move down through here in 5 waves, in terms of 1, 2, 3, 4, 5, that's an impulse wave, then we'll get a 3-wave counter trend, and then we'll move down from that point. So this particular pattern here and this particular pattern here is what we need really to observe as such. This 5 waves gives us a short. This 3-wave price action doesn't. But at the end of the day, whatever happens, give it a session. The 1250 as support or resistance is the name of the game. The silver market is in the same position as well. In fact, a lot of commodities are, well, not the grains, but so yesterday we'd been looking for, well, if the 1872 became the retested resistance, we were looking for a short down to 1850. That's not the case. It held up as support, and it has the same pattern as gold, and would be looking at it in this light here. So also possibly moving a little bit higher before rolling over through here into the group 1 here. If at any stage the 1930 became the support, the top of group 1, well, then we would be looking higher from that point there. So once again, we need this rally to play out, and we need the 1900 as a retested resistance here. The daily chart is oversold, but let's see how that progresses. The copper market, just on the 4-hour chart here, we're looking at this as being, well, an A wave, a B wave, and a C wave, but it also can be down for 1, back for 2, and down for 3. Now, we won't know that until it plays out beyond this particular pattern. Both patterns down here will have the same internal structure, and that's what we're looking at the moment. And from wave B down to wave C or 3 here, there will be 5 waves. And yeah, let's have a look at those. So what we've been looking at through here is basically 5 waves down here for wave 1 or wave A, back for wave 2 or B, and then looking down here for 3 or C. And 5 waves would be looking at wave 1, wave 2, and wave 3 being the longest here. And I think this is the best fit, the 1, the 2, the 3, the ABC for the 4th here, and the 5th here. So we're looking at wave 4 here in terms of an A and a B and a C, and then down for wave 5 of C or 3 or C. Now, that will bring us into roughly the 305, which is a midpoint between the 300 and the 310. So that will be important as support or resistance. But this is as far as the Elliott wave goes, this is as far as we can sort of predict. However, from either wave C or 3 or C, we'll see some sort of move up. Will it be wave 4 as a corrective move, or will it be 5 waves as an impulse wave? That's what we need to figure out. At this point down here, the daily will be oversold as such. In fact, it's sitting on a trend line. This trend line here comes from not so much this low here, but from the top here. So this top one here just brought down to here. That's where that comes in. So, there'll be a bit of, rough price action on that trend line there. The oil market, the current move down is actually coming in at 101.50, which is roughly the 50% retracement level from this move here. The 61.8 is the 101 area here. The move down here may not be complete. Would need further evidence of a move up. And that's obviously this move up is in line with what we've just seen in gold as well and silver. The move down through to here, this, as I mentioned, this particular move down through here that we've been tracking can be counted in different ways. However, what is clear is that this move up here is in 3 waves, and this move down through here is in 5 waves. So it's possible to have the A, the B, and the C. It's also quite possible to have this move here as an A wave here, a B wave here, and a C wave here, even though it doesn't count very well through here. I won't go into WXYs and things in the morning report. I just like to keep things in very simple. The sort of other main point here is regarding the levels, actually, because we're in group 1 here, 1, 2, and 3. 102 as support supports the market. If it became the retested resistance, then would be looking down at 100. So, and that's quite probable as well, that it'll move up through here. Would be a bit like gold as well, would be in 5 waves. In fact, it's more advanced than gold. It's already moving up through here. We know this is 1, 2, and 3, back for the 4th and up for the 5th here. So, we just need to see how this develops, because, it can develop in terms of, 5 waves to here, 3 back, and then another 5 up through to here quite easily. So we just need to be a little bit mindful of that, rather than looking for it to roll back over through here. So we'll just it needs a session to settle. The ECB, as I mentioned yesterday, had last night, had their announcement in terms of cutting rates and bond buying, etc. The gas market, this is just the daily chart here. And, I was kind of viewing this as an A and a B and a C here, and that's all fine. And we got on top of 450, and, that it is a support. But the little move up through here never gave us a little 5-wave structure. It gave us like 3 waves. So it was just a little bit sort of dodgy. And looking at that, I know that perhaps we could have put the wave C here in terms of 1, 2, 3, 4, and 5 to here, but it didn't make a new low here either. But it's quite possible. I just don't know the sort of intricate sort of personality of this particular market so much. It's a bit of a new one, so we just got to sort of play it safe and observe it a bit further. But looking at this here being possibly corrective, then this high would be taken out here, and we'll be looking for a move above the $5 area through here. Now, there was a couple of things we could do here. I mean, we knew the 450 was support, and we could have gone long on that, but it just didn't give us this move here didn't give us 5 waves. We also knew that being above 450, the 61.8 retracement level was at 4.65, the first level within group 2. So we really had to allow that to play out. And now it's in group 2, 465, 472, and 480 is group 2. And, I just feel that, we really need to be on top of 4.72 as support to trade this market long. Technically, we could move up from the 466 here, I think it is, 466 here, gives us overlapping wave structures now with this move through to here at 468, 469, 470 here. So there's a clean breach of that wave structure there, which gives us overlapping structures. So it's just another feather in its cap for being bullish, because it's creating a bullish market now. I'm not quite sure what to sort of say here. It's facing supply here. Anyway, support on 472 would give us a trade further to the upside, taking out all these highs here, and would probably send us quite high actually, because it's quite a large correction here. Normally the distance across here as such can give us this accumulation, can give us the distribution up here. So we could end up at sort of, much higher up here at 530 area, even higher to 550. The soybean market is on, we're shorting this at the moment, as you may know, and it's sort of on track. And the wave 4, the A wave here, back in this level here, I think about the 1430 sort of area through here, and we're counting 5 waves down through here, and currently we're in the 3rd wave here, and 3rd waves, as you may know, move swiftly, and that seems to be the case. We were a little bit concerned about the support being offered by this particular trend line through here, and also the general subgroup 2 area here, 65, 72, and the 80. But yes, it's moved through quite nicely. So we can bring our stops down to 483 here. We'll still keep the target at 450 here, because it's an old low here, even though that the market can move through that as such. So we're looking at this as wave 1, wave 2, and then down for wave 3. And in wave 3 here will be wave 1, 2, 3, 4, and 5 moving down into this sort of area here. So it can come much lower, even though our target is 450. Just on the intraday here, if I've got it, it's a bit messy, I know, but from this wave 2 up here, this wave 1 down here doesn't count very well as a wave 1 as such. It's not a very clean 5 waves here, so it's a little bit sort of dodgy on that front, but we need to run with it because we've got 3 waves here as wave 2 here, and then we're in wave 3 coming down into this area here, and I'd look at this as being down for 1 here, back for 2 here, and then it'll be basically 1, 2, 3, 4 and 5 for the 3rd wave, the 4th wave to bounce here, and the 5th wave to bounce down through to here. So there will be some consolidation across the 1450. So if you took profit at the 1450 and waited over here for the resistance, you'd probably get down to, into this area here. The 144 is important as well. It's where Gann and Fibonacci meet in their numbers, and it's squared at 72. 72 with 144 as well, and it's part of the 9 series of numbers, so it will kick in a bit, but we're looking at the 430 down here, but our main trade is from the 490 down to the 450 here and exit, but you may want to just sell part of that. The wheat market is on track to 600 here, and we're looking from the 620, we're looking at 1, 2, 3, 4, 5 waves down and for a bounce here. And this is where the US dollar comes in as well, because if we do get the US dollar moving back down, and well, then it's obviously going to offer support to these markets that have been moving down swiftly, the wheat and also the corn here as well. I can just see that it's got further to move down. Our target here was at the 450, but if you're still short, then continue short down to the 440 area here. There is support at the 440 area. It may not get there, so if you can get down to 445, that would be fine. But I can see from this little point here that we could look at this as being 1 and 2 here, and then 3rd wave here, 4th to retest 450 and down. So anywhere into the 448 down to 445 would be fine for that. The coffee market, as mentioned yesterday, you can short and keep a stop above the 72 here, and have 165 as the target area through here. This pattern across here is looking at being a 4th wave, and we can see that from here, from 1, 2, 3, 4, 5 here, 4th wave here. It may be a triangle pattern here. It may be just the single A, B and C to this point here. Not quite sure, but yeah, look, once this figure here, the 168 is breached, then it'll retest that and then drop lower into the 165 area here. The sugar market's on its way down to its 61.8 retracement level on the daily here, from this whole move here at the medium level 1650. So it's when you breach the $17, and it will continue down here. It will have supporting group 2 here, which is the 80, the 72 and the 65, but the 1650 is the target there. And as I mentioned too, with wheat and corn, if that US dollar does turn, then we can look for this to stabilize at that medium level there. The orange juice market is on track here, just looking at it on the 4-hour chart here, the bigger picture. They're looking at a positive wave structure to the upside, and the reason for that is because of this move here being in 3 waves, and this market moving back up into 160 area here. But yeah, so we can expect the 3rd wave to come in around the 165 area here, and then pull back to the 162, 161 area here, 38.2 retracement level of wave 3 here. Once that's completed, we'll see further move up into the 170 area there, where the target is. All right, thank you.